Well, hello, traders and investors. I'm LA Little, and this is your weekly NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means each time we ask ourselves what happened last week and what might it tell us about the coming ones. I do this show 4 times a week. I do it once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel LA Little. If you want to subscribe, reach up in the right-hand corner. Do so anytime I push content. You'll get a notification. As far as what happened last week, on Friday you had a push down. That push down came off the employment numbers, gap down at the top, right, flipped around, closed positive by the end of the day. We'll look at the charts. That's a reversal, probably portends that we're going to see some upside this week. Pretty much green across the board, and if you look at everything, the problem spots continue to be where they have been overseas. That's Asia, right? That's also the Nikkei, and it's also there on the Shanghai, on the Hong Kong indexes. So I think you see some problems still in Asia. I don't think those problems are going to go away, and it's going to continue to be pressure on the world markets. If you look at the week itself, the Nasdaq was down, as well as the S&P. All of them were down, but the big loser was the Russell. The Russell is the one you're going to want to watch to see if it flips back around on this rally attempt that's probably going to get underway. Let's pull up the charts, take a look at those. So we'll start here with the S&P 500. So the S&P comes down into an area, and although I didn't advertise it here as much as I did to the members, I had suggested that push back would come into this bar here, the top of this bar. And so as we pushed back down, that was the expected turn point. 2038, we got into 2039, so missed it by a point. Volume not nearly as heavy as it was over here. So the ideal here being, of course, is if you push into this area, right, after an extended move up, you're going to find probably support. And I've been telling members for a while, support's probably going to be bought on that first trip down. I think what you're going to see is what we've seen before, and that is if you look over at what happened off the August push, right, you had that consolidation move. That's probably what you're going to see now, and so I wouldn't expect anything much different than that. So you're going to have some bouncing around up and down as a result of this big push and the consolidation that takes place off of it. If we look at the Nasdaq right now, the Nasdaq's been a lot weaker. You can see the decline here, much steeper, much more prolonged. Nasdaq also came back into kind of a support area with these two bars. If you look at it on a weekly, it also did exactly what you would have expected, right? And what I had suggested to the members prior to this taking place, and that is the Nasdaq should try to trade back into the high of this second breakdown bar. One there, one here. That was where it came back into. Also volume here now, not nearly like the volume compared to what it was then. Again, should see some sort of a bounce. If you don't see the bounce, right, then something bigger is going on. Neoclassical is all about what is expected, what happens, right? That's how you tell, what's going to take place. And what is expected is based on the probabilities of what is taking place now. And so, for example, if we look here at the Russell, and I'm going to use the daily chart, we talked about this last week. Russell was coming into the swing point highs low. That was a little bit more than it should have because it was more than 6 bars across before the test. But it gets into it, right? And the low here on the Russell on the daily, 1108.17, closes at 1107.95, so just below it. And what does it do on the next bar? It reverses. That more or less is a bullish retest and attempt to regenerate. So now if you look at it purely on a candlestick, right, what you have now is you actually have a little reversal situation, lighter volume, hammer, right, hammer reversal off the full retest of a bullish retest regen, which has a higher probability of potentially moving back up the other way. And so, when you see all of this, what should it do? Well, it should go this way, period. That's what should happen. If it doesn't, it's telling you something bigger is happening this way. If it does, then it's simply a consolidation after a big, long move higher, and you have to respect that it can go higher. And that's the tell that you see. If you look at it on a weekly, Russell comes back in almost to this bar. The top there is 1094. You got down to 1101. So you're kind of coming into that bar. Didn't quite get to it. Again, volumes also suggesting this thing should try to push higher. Where can the Russell push to? Well, the next bar on the way up is here. That top, if we get a number on it, it's 1163. You got as high as 1156. So the Russell, being the stronger of the indexes, could actually get a push to a new high. What you might see developed, if that takes place, is you might see new high here, lower highs on the NDX, even on the S&P potentially, divergence that could portend the next move to a downside. So those are the way the indexes are set up. If we look overseas, let's pop over, quickly take a look at what's happening in the world markets. The world markets are a mess in Asia, as we've talked about. We saw, for example, Australia get a rate cut. Australia pushes up, going into the swing point high. It's failing at the swing point high, but it's pushing more volume. So as they devalue their currency, that's going to help their markets. This one looks like it's going to try to break higher. But if you look almost anywhere else in Asia, and I'll go to the Hong Kong market as an example, big push down. If you look at it on the weekly, that swing point low, it was doing a full retest in an attempt to regenerate to the downside, and that's exactly what it's now trying to do. So Asia, still a mess. It's still a mess here. It's in trouble in the Nikkei as well. Big pushback down on the Nikkei. And if you look at Shanghai definitely telling you the same thing. So no matter where you look in Asia, it's a problem. And that doesn't look to be going away. And that's going to keep a wrap on the world markets when you have one of the big three regions still weak. If we look over at the German market and the other markets, it looks like we're missing a volume quote. We'll have to go figure that out and get it in there. But if we look at these, they got little reversals at the end of the day. They were coming back into this big bar. They're holding, and this is the strongest of the indexes, right, the German. They're coming back into this big bar. That low now has held, right? It's going to try to push back up as a result. And so I'd be very surprised if these markets don't try to push higher. If they do, that's of course going to help the U.S. markets in their attempt to push higher. Same thing in France, a little hammer reversal. Much weaker, but a little hammer reversal type situation going on. Holds these swing point lows. I'd expect some sort of bounce here. And finally, if I look at Switzerland also coming back, a little hammer type reversal as well. None of these markets strong, but they do look like they're going to try to get their bounces to be consistent with what the U.S. is doing. So overall this week, I expect some sort of an attempt to push back higher. Failed bounces is where the bigger trends to the downside take place. And so if we just take this chart as an example, right, you get your push, you make a new high, then you come back on some sort of a pullback. The bounce fails at some level, and this actually is not a bad level to think about it, and then you get the larger push to the downside. The failed bounce is what you're always looking for if you're going to get a real trend change, because generally speaking, bull markets don't crash, they generally roll, right? They don't just come straight down. Buyers never just go away. It takes a long time to get some sort of a turn, and that turn takes place as a roll usually. And the way it takes place and becomes more of a crash situation is failed bounces. And so, and those failed bounces being on the longer term. So if we look at this, like say, pull over a monthly, how could you get the crash situation on a monthly? Well, the crash situation takes place where you get multiple swing points breaking, which hasn't happened yet. It's very close. And it happens as a result of some sort of a bounce that eventually fails, and then you get the big push. So be aware of that. That's it for tonight. Thanks for joining me. Have a good week, and stay tuned on the daily Neo Wraps. I'll keep you in touch with what's happening. If you want more detailed information, portfolios, retirement services, so forth, hit the Get Started button. Take a look at what we do for a reasonable rate. You too can participate in more of the detailed nuances that I give to the members on a daily and weekly basis. Have a great one. Take care. Good night.